Good afternoon, everyone. This is Shallu Bains, Assistant Professor, Department of BCA, IIMT College of Management. Today, I am going to give you a lecture on accounting process. The contents we will be covering here will be meaning of accounting, the accounting process, double entry system, types of account, journal, ledger, and trial balance. Let us start with the introduction of accounting. The American Institute of Certified Public Accountants defined accounting as the art of recording, classifying, and summarizing in a significant manner in the terms of money, transactions, and events which are in part of at least a financial characters and interpreting the results thereof. Again, in 1966, AICPA defines accounting as the process of identifying, measuring, and communicating economic information to permit informed judgment and decisions by the users of accounts. In a nutshell, we can say it is a process of recording, classifying, summarizing, analyzing, and interpreting the financial transactions and communicating the result. What does it mean? It goes in a sequence of different steps. First one is recording to it's not possible for everyone to memorize each and everything, so we just go for recording it and then classify it on the basis of some similarities and summarize. Summary is prepared in the form of profit and loss account and balance sheet, and after that all the results are analyzed and interpreted or reported to the different users of the accounting informations. The accounting process starts with the identification of transaction. What does it mean? There are so many transactions in a business. You have to identify the transaction which has to be recorded, like the transaction which has some financial character or can be converted and is measured in the financial terms that are to be recorded. After that, the preparation of the documents are done. Each transaction is supported with some documents that can be in form of receipts, bills, etc. Recording of transaction in journal. This is the very first book. This is also known as original book of entry or our primary book of accounting. After that, after entering all the transaction in journal, these entries are posted to the ledger on the basis of some similarities on the names. They are classified in different accounts, and on the basis of accounting accounts prepared in the ledger, trial balance is prepared. This is based on the balances carried forward by the ledger, and then again we do some adjusting entries for the purpose of preparing financial statements, and after that financial statements are prepared. These are in the form of trial balance and profit and loss account and final accounts. Accounting cycle. This is a cycle that goes in sequence, starts with the recording in the journal and that goes to the ledger in which we post all transactions. After that posting, we go for preparing the trial balance on the basis of balances which we extract from the different accounts of the ledger, and then trial balance, if it tallies, it means that both the sides of trial balance, that debit and credit sides, are equalized. It means it is the evidence that you have prepared your accounts accurately arithmetically. On the basis of balances of trial balance, we prepare trading account and profit and loss account. This is known as financial statement, that gives us the idea of the economic results of the business as well as the performance of business which we have done during this particular financial period. After that, balance sheet is prepared. This is to know the financials position of the company, whether we are in a strong position or in a weak. There are different criteria to judge it. Next, double entry system. As we know, as we are aware that in India double entry system is followed, in which this is based on the scientific principle and used universally by most of the business organizations. Every business transaction involves exchange of equal values or benefits. Exchange means the act of giving or receiving one thing in return of the other, or service or benefit. Thus every transaction has two aspects. One is receiving and giving. The receiving aspect is also known as incoming aspect, that is debit, and going aspect is known as the outgoing aspect, that is credit. Account. Now we are using the word account again and again. What does it mean? Account, it is a summarized record or statement of all transaction relating to a particular person or to a asset or liability or income or expense. According to Collar Dictionary for Accounts, an account has been defined as a formal record of a particular type of transaction expressed in money. Account is prepared in a T form. There is some one side debit side and the other one is credit side. Right side is known to be a credit side and debit side is its left side. Both the parts, debit and credit, are further partitioned in four parts each. First column is for date, second is for particulars, third is for general folio, and fourth one is for amount that is to be debited. And the second part, that is right side, has also two columns. One is for date, second one is for particulars, third one is for general folio, and fourth one is for account that is to be credited. Now, classification of accounts. Basically, accounts are classified on two types. One is personal account and the second one is impersonal account. Impersonal account is further classified into two parts, that is real accounts and nominal accounts. Now, personal account. These accounts show the transaction with customers, suppliers, money lenders, the banks, and the owners. For example, Aditya's account, Chetan's account, Mr. Rishike's account, some company's account, some bank's account, university's accounts, etc. First, personal account are further classified in three parts. One is natural, that is just like us, human beings. Second one is artificial. Artificial are in the name of some uh, companies, banks, institutes, etc. And the third one is representative personal account. Basically, these are some kind of accounts which are covered in nominal account, but when they are added with some prefix and suffix, then these come under representative personal account. And second word, real account. Real accounts may be of the following types. One is tangible real accounts. These are accounts of such things which are tangible, that which can be seen, touched, felt physically. For example, land and building, furniture, cash, etc. Second type of real accounts are intangible assets. As the name suggests, these cannot be touched, seen, or felt physically, but they have some value for the companies. For example, goodwill, trademarks, patent rights, etc. After this, nominal accounts. Nominal accounts includes accounts of all expenses, losses, incomes, and gain. Nominal accounts represent only services or uses. And now, rules of debit and credit. The two sides of any account are arbitrarily distinguished. The left hand side of an account is called debit side and the right hand side is called the credit side. The rules relating to the personal account are: debit the receiver and credit the giver. What does it mean? The person who is in the state of receiving something from the company, his account will be debited. On the other hand, if he is giving something to the company, that he will be its account will be credited. Second, real account. The rule for real accounts are: debit what comes in, credit what goes out. What does it mean? When assets come in, we will be debiting that asset account. When asset will go out, that means it will be sold out, the account will be credited in the name of that asset. Third one are nominal accounts. These are related to the incomes and expenses. Debit all expenses and losses and credit all incomes and gain. This is the rule. When you earn something, it will be credited. When you are paying for something, for some service, etc., it will be debited. Now comes journal. Journal is primary book of recording. It is essential in a business to record each and every transaction immediately after it takes place. To record transaction in a separate book called journal is maintained to record known cash transaction like credit sale, credit purchases, sales return, purchase return, bills receivable, bills payable, and cash. These books are called subsidiary books. Journal can be defined as a subsidiary book in which all day-to-day monetary transactions or business are recorded first as and when they take place in the chronological order, that is date wise in debit and credit form and in a systematic manner. Journal is also known as primary entry or original entry book because transactions are first entered in the book and then they are posted in the ledger. That is the second step of the accounting process. The layout of journal is in this form: date, particulars, voucher number, ledger folio, amount debit, and amount credit. Then comes ledger. It is principal book of accounts relating to a particular person or property or revenue or expenses in which entries are recorded in summarized form. It contains all accounts, that is set of accounts such as real, nominal, and personal. Main function is to sort out all items from the journal on the basis of their nature and names. Means all the same natured accounts with same name are posted in the book of ledger. This is a printed book in which you will post all transactions relating to some account. The format of ledger account will be like in the T form, that is again four sides in the debit side and four columns in the credit side. Debit side has date, particular, journal, folio and amount. In the same way, credit side has also date, particulars, journal, folio and amount that is to be credited. The term we use for entering something in the ledger is posting. Each transaction is first recorded in the book of original entry, that is journal, and then it is posted into the ledger on the basis of similarities or with the same name. Transactions are recorded at one place. Posting is made on the debit side of account which is debited and also to the credit side for account which is credited. Entry on the debit side starts with to, whereas on the credit side it starts with by. Name of the credit account is written on the credit side and name of the debit account is written on the debit side. Then comes balance and balancing accounts. Each account in the ledger may have some entries on debit side and some entries may be on the credit sides of account. Difference in the total of both sides is termed as balance of account. Process of extracting balance and inserting it on the lesser side of an account is called balancing or closing of account. For example, debit side exceeds the credit side. What does it mean? The balance will be taken in the credit side like by balance carried down. If credit side exceeds the debit side, then what does it mean? It means there will be some credit balance that will be in the form of balancing figure in the debit side like to balance carried down. Then types of balances will be of two types, debit balance and credit balance. If the debit side of account is more than its credit side, balance is debit balance, and if the credit side of the account is more than its debit side, balance will be credit side. Then trial balance on the basis of balances which we will get from different accounts in the ledger. Trial balance will be prepared. Trial balance is in the T form. The fundamental principle of double entry system or bookkeeping is that debit must be equal to the credit. In other words, debit aspect of any transaction is always equal to its credit aspect. A trial balance is a summary of all the ledger balances outstanding as on particular date. List of debit balances and credit balances should be equal. It is said that trial balance is tallied. When trial balance tallies, it establishes the arithmetical accuracy of record. It is a statement prepared before preparing the final accounts. It is a link between books of account and final account, that is the trading and profit and loss account and the balance sheet. Some important items that are taken in trial balance will be having balances like drawings will be having debit balance, purchases debit balance, expenses debit balance, carriage inwards debit balance, carriage outwards debit balance, stock debit balance, interest paid debit balance, loan given debit balance, assets debit balance, sales return debit balance, investments debit balance, goodwill debit balance, cash debit balance, capital will be having credit balance, incomes will be credit balance, loan taken will be taken in credit balance because we will be having some liability for paying this, interest received as it is income will be having credit balance, suppliers credit balance, and return outwards will be in the credit, and among all these, sales will also be in the credit side of trial balance. Then as we are saying that trial balance is conclusive evidence of arithmetical accuracy of accounts, but still there are some errors. These are in the form of mistake that are disclosed by trial balance and some kind of errors which cannot be disclosed by trial balance. Let us do that. Errors disclosed by trial balance. Number one, posting of wrong amount. Wrong amount posted in the ledger in the form of two accounts involved. For example, received rupees 450 from Mr. A and wrongly posted to his account as rupees 540. This will be shown by the trial balance as some balance of rupees 90. Posting to the wrong side. For balance, if discount allowed to customer is rupees 100 is posted to the credit side of the discount allowed, trial balance will not match. Omission to post from journal. For example, if the goods purchased from A are recorded in purchases account but omitted to be posted to A's account in the ledger, the credit side of the trial balance will fall short. Carrying wrong amount to the trial balance. When a wrong amount is carried from ledger to the trial balance, it would cause disagreement of the trial balance. For example, a balance of rupees 518 Mohan account wrongly recorded as rupees 850 in the trial balance. Wrong totaling or balancing of ledger accounts. If some error is committed while totaling or balancing of ledger account, the wrong balance shall be carried to the trial balance and the trial balance will not agree. Wrong totaling of trial balance. If there is an error in the totaling of two sides of trial balance, the trial balance does not agree. Now, errors not disclosed by the trial balance. Even though both the sides of trial balance tallies mean debit is equal to credit, but there are some errors which cannot be disclosed by trial balance. Like first one is error of omission. If a transaction is omitted to be recorded in the books of entry journal, both debit and credit aspects will not be posted in the ledger, and hence the trial balance will not be affected either on the sides, whether it is debit side or the credit side. For example, good purchase from Sohan omitted to be recorded in the journal. No ways in any way this transaction was omitted to be recorded. Result will be that no debit, no credit account will be affected, side will be affected, result will be the same. Error of commission. If an incorrect amount is recorded in the books of journal, both debits and credits shall still be equal and the trial balance will agree. For example, sale of rupees 10,000 wrongly recorded as rupees 100 in sales book means 100 rupees in the debit, at the same time 100 in the credit side. Result will not affect the both the sides of trial balance. Errors of compensatory nature. What does it mean? When two or more errors meet in such a manner that they neutralize the effect of each other, it will not cause any disagreement in the trial balance. For example, rupees 500 note debited to some account is compensated if the same amount is not credited to some other account. Next comes error of principle. If capital expenditure is treated as revenue expenditure or revenue expenditure is treated as capital expenditure by mistake, it will not be disclosed by the trial balance. Both the sides of trial balance will be equalized because this error will not affect either of the sides, whether it is debit side or the credit side, as entry will be made but in the wrong account. This is the principal error. All these errors will not be disclosed by the trial balance. These are the basics of accounting. Thank you.